well. Let me start recording here so we can gather some insights and stuff. My name is Pat Gage, and I'm the host of the Commercial Real Estate Investors Investing Mastermind. And tonight, just an open forum. If you have any questions, you have a deal that you want to talk about, we can review that. I do have some stuff that I could cover as well, but I want to open up to the floor first. If you have any deals you're looking at or opportunities, any questions, we'll start there, and you can, let's see, raise your hand, or I think you guys can, you can unmute yourself. So I think you guys can do that. And if you can't, raise your hand. I don't know what the settings are on this, and I do apologize. I think you guys can unmute yourself. Nobody's working on anything? Nobody's working on any kind of deals or anything like that?
Looking for the deal.
You're looking for the deals. Well, yeah, we all are, aren't we?
Yeah.
Where are you looking at?
Metro Detroit area, particularly Oakland County or Macomb County.
Okay.
Or in Wayne, then maybe around Canton, Westland.
Okay. Awesome. Yeah, those are high demand areas.
That's right.
Yeah, it's the same thing for me too. I'm basically, I've only done residential duplexes before. I'm looking for some commercial in Michigan myself as well. So I'm in the same position.
Okay. Now, I guess, are you guys relying on the broker to bring you information? Or are you doing some active marketing?
I would say for me, I haven't done any active marketing. It's been a lot of some brokering, some word of mouth, just networking, some off-market deals to that. Mainly for duplexes. For me, I'm trying to graduate and do something outside of, mainly been multifamily. I've never done any retail of anything like that. Mainly I'm only invested in duplexes, so I'm trying to do larger multifamilies. But it's been a lot of word of mouth and just researching on my own.
Okay. Yeah, that's a good way to do it. Because if the sellers can, save a few bucks with that without having to go through a broker, and you can close, that's great. So now, where are you looking for either duplexes? Is there a specific area?
Yeah, I own quite a few in Detroit, now. So that's largely where I do my invested at. I'm open, but largely I invest in the city.
Okay, awesome. Okay. Yeah, that sounds like a good deal. The other gentleman that chimed up, that, are you doing any kind of outbound marketing, or are you relying?
No, I was not very active, but from last 1 or 2 weeks, I'm being more proactive. I have some residential condos, but now I slowly want to move to multifamily.
Okay.
I have a few other friends, they are also interested, so,
Awesome. Okay. And that's it. And you said you're looking in what, Oakland County and
Oakland, Macomb, or around, if in Wayne, then around Canton, Westland.
Gotcha. Okay.
Yeah, hi all. My name's Christina. I currently am flipping a house in Garden City. I have a rental in North Pontiac, and also looking to get into the multifamily space. Open to Michigan, but also have been networking with people that are mostly in the Sun Belt and Texas. So very open to JVing or co-JVing.
That's good. That's good. Yeah.
Did you say you have some property in Pontiac?
I do. I just have a single family home in North Pontiac, a 3-1 on a slab.
Okay. May I ask, when did you buy that? Recently or? Okay.
I bought it in January. We closed in January.
Oh, recently. Okay.
Yeah. Do do you have anybody who's looking for a rental in Pontiac? Because we're actively looking to rent it.
Okay. How many bedrooms?
It's a 3-1.
3-1. Okay. What are the
Yeah,
class? I may have someone from Oakland County, Oakland University. Few students were looking.
Okay, yeah, great. I'll put my information in the chat. I'll be home in 15 minutes, so I'll put my information in the chat. We can connect later.
Yeah.
Thanks.
Okay, awesome. Awesome. Yeah, definitely put your contact information in the chat. Because you never know who you're going to meet here. You may meet your next partner. You may meet your next hard money lender. Who knows, right? Well, that's cool. That's cool, Christina. Thank you for that. I appreciate that. Anybody else got any other deals they're looking at or working on, or?
Yeah, I'm confused. Pontiac is, I know Pontiac history was maybe not great, but recently I see a lot of activity going on. I'm still not sure if it's a good time to invest in Pontiac.
Yeah, so our house is north of Connect, and it's actually a really, really nice spot. Like, I would feel completely comfortable living there. It's a very safe neighborhood. They upkeep the whole neighborhood. We've driven all the streets. We've been there all times of the day. And it's very safe. The neighbors are really nice. And I would have no problem living there myself.
Okay, perfect. Yeah. Recently I'm seeing a lot of investment going on in Pontiac. So especially after this Amazon thingy, there's a big investment. Yeah.
Exactly. Yeah, Amazon warehouse definitely is helping the area.
Now, where is that going in Pontiac?
I think I would say the northeast corner of Pontiac. It's, I think, about 3.5 miles east of our house on the north side.
Okay.
Remember there was a dome?
The Silver Dome?
Yep.
Yeah,
Yep.
so no.
Yep.
Is that where it's going?
Amazon took over that place and they built. I think that, if I'm not mistaken, I think they call it their biggest warehouse in Midwest.
Oh, wow, really? So it's already constructed, right?
Oh, yeah. It's functional
Yeah, it's
from
already
now,
open.
1 year or so. During pandemic, they started it. Yeah.
Oh, wow, okay. So that would be an economic boom to that area.
Mm-hmm.
Yeah, they're also trying to read. There's a lot of investment. You can't really tell downtown on Saginaw, all those buildings. I was talking to a realtor in December, and she was just pointing out all the buildings and who bought what building, what they're doing with it, just on Saginaw Street alone in downtown Pontiac.
Do you do a lot of retail stuff and commercial stuff in that area?
I'm looking for retail. I haven't gotten into retail yet. But I'm looking. That's kind of how I ended up speaking with this broker, because I was looking at a retail building on Saginaw. But the last 6 months, I've just been heavily focused on trying to find retail investments in Macomb, Oakland, and Wayne County. So I just haven't landed on one yet that made sense, but that's pretty much where my focus has been.
Yeah.
It's good to be versed in different things in case you come across like a mixed use, that you can kind of see how it works together, because you never know in today's market. It's a little challenging to make the numbers work sometimes.
Yeah. So a few of my friends, we were actively talking recent days. So one of our friends who was kind of a group leader for us, who came up with the team, he was of mind that maybe we should build it. But then I was able to convince the team, construction is super expensive these days and labor shortage is a genuine issue. Instead of just building it, let's focus on finding existing building and just remodel it, or, if we have to take some walls out, or, something like that. So team liked the idea. So now we're looking into that kind of situation.
Yeah, you got to kind of be versed in both of them. the one we have in contract, under contract right now is an existing, we're gonna have to renovate it. We're also looking in that area as Class A building too, you know, because you just never know, you know, you could get different investors, but you know, you're right, you know, redoing and rehabbing may be tough because of supply issues, and getting the new products in. So yeah, you got to be open to doing kind of both things if it makes sense, right? If you can get the land at a good price, you know, doing the underground, the vertical stuff like that. I know there was one in I think it was Westland that they had that way. They were selling like 4 or 5 parcels of land with the existing, I think, 24 units, and it just made no sense, right? You know, for what they were selling at 24 plus the 5 lots, you know, you had building costs and stuff like that you had just spoken about. You know, it was just you couldn't buy it because you had to develop it because it didn't, you with the loan on there, you couldn't make any money with just the 24 on it.
Yeah.
And you got to look at both sides of that, you know, the supply side of it, you know, construction side of it. But again, if you get hooked up with a contractor that may have their own in-house people, you know, that's who we're talking to with another project, you know, somebody that has their own people, you know, that they send, like, let's say they're big enough to send them to other states, you know, that's a pretty good sized company, right? Compared to, you know, a local, you know, handyman kind of a thing where he's got to go get a crew, you know, every day. But again, that's something you're gonna have to kind of do the due diligence on and see if they're, you know, big enough to do that or have that capability. Yeah, definitely. So what type of, what unit sizes are you looking at in the group? Are you looking, I know a lot of you guys are trying to get into it. Are you looking, like Tim is looking at, you know, duplexes? What unit range are you guys and gals looking for?
We are new to this particular thing. So around 10 plus minus,
Okay.
yeah.
10, okay, good. A good way to start.
And Pat, I have been doing duplexes. I have 9. I had 2 being renovated, so I got 9 duplexes now. But I'm looking to do something bigger, maybe get into 10 units or something like that, bigger than duplexes. So that's what I'm looking for. I'm hoping to find, you know, a couple of deals before the end of the year.
Awesome. Well, that's good. Now, are all 9 of those duplexes like in one area of the city, or are they spread out?
Most of them are east side. A few of those are in Grosse Pointe, but they're all pretty much on the east side.
Okay, so centrally located. Okay.
Yeah.
Okay. Well, that's good. Yeah, because you obviously you want to grow and maybe have 9 or 10 units under one roof, right? And then yeah. Well, that's good. That's good. Now, how long have you owned those duplexes?
The longest one I had, I'm about 4 years into it. My goal has been to buy at least 4 a year.
Okay.
And I haven't always met that goal. I came short last year with 3, and I'm only, you know, so I come short, but I think the longest one I've had about 4 or 5 years now. So not that long.
Okay, well, that's good. It's a good accomplishment, man, for that short of time. That's great.
Tim, how are you funding your 4 a year or 3 a year?
Hey, I was doing mortgages, to be honest with you. You know, I didn't know any other way. I'm not a full-time investor. I got a full-time job, you know, and you know, I've been doing mortgages, and a couple of them I cashed out. 3 of them I did cash. And I'm trying to refi, but 3 of them I just bought cash. The other one I have mortgages on. Probably not the best way, but you know, I'm stumbling my way through it, full disclosure.
Well, that's how
Love
you
it.
learn.
Congratulations.
That's great. Yeah, that is awesome. That's awesome. Now, so when you buy them, are they where you have to go in and gut them and bring them up to standards, or are they in pretty good shape? Or is it
most of them, except for the last 3, the cash ones I had to renovate, and they've been, man, they're great, but just with the contractors and all those things, the first one I did pretty good on with the contractor. This last one, I still got one, and I renovated the bottom unit first. I gutted the house completely, and then was able to get the first floor up. Ran short on cash, got the first floor up just to get some renters in there, and then now I'm rehabbing the other ones. But the rehab has been scary, for me. Just finding the right, not just the cost of material, just the steady work as well too. In my full-time job, we see it on bigger jobs. We have a construction company, it's bigger, but even personally, it's been a challenge. But I try to buy properties that need the minimal amount of work. But 2 have been full rehab so far. I try not to get into that though, honestly.
okay? So do you have your own crew, or you just use one particular guy that's got his crew?
I got 2 guys now. Then again, it's really through. I'm big on connections, trying to connect with good people more than anything. And mouth, I found 2 different guys that have been up until recently fairly consistent with getting the work done. And they got their own crews, but they've been okay now. But if I had a bigger project, I probably wouldn't use them.
Gotcha. Okay. So you know their limitations, which is good, because that helps you when you're looking for properties, right? You don't get overextended or get something, yeah, I can do it, and all of a sudden, he can't, and then you're stuck. So that's good. Well, it sounds like you got a good process, Tim, that you obviously learned a lot in the short time you've been doing this. It sounds like you're doing pretty good.
I'm thankful, man. I'm blessed. There's no doubt about it. I'm learning a lot through the way, and just trying to connect with other good people and continue to learn and grow. So that's what it really is. The process. I'm building the process as I go. And failing fast. I'll tell you that.
That's good. What would be the one thing that you would tell your younger self? And it's only been 4 years, but just what one thing would you tell your younger self when you just started this that now?
Oh, I've been dealing in the realm of real estate, although I had a full-time job for a long time. Man, that's an excellent question. I probably would have started sooner in this. I probably would have took the jump sooner, right? And I waited a little too long, contemplated a little too long. I at one point, I think in 2008, I was managing properties, and I did pretty well and made some very bad decisions financially and failed there. And so I learned a lot from that. So I think that helped me. And now I made some bad decisions and didn't manage the business. I didn't know as much as I thought. It humbled me. I tell you that. I wasn't with the right people, but I didn't make a lot of good financial decisions and managed it poorly back in 2008, 2009. So I think some of the processes and people I'm dealing with now has kind of really helped me. So
that's good. That's good. That's some good advice. Yeah. I mean, I've heard that a lot of, we all say that, I should have earlier this, and it's always scarier than you think, right? When you get into it, you're like, oh my God, this is not as bad as I thought it was. And, that's great. Thank you for that advice. That's awesome. Christina, how about you? What would you tell your younger self? You have the one house in Pontiac. Do you have other properties as well?
So I have the one house that we bought turnkey in Pontiac. All we had to do on that one is hang blinds, and we did and re-silicone the bathroom window because it really needed it. And we're flipping a house in Garden City. We're about 3 weeks out from being done. We did all the demo ourselves. That was a huge learning curve, but saved us an extensive amount of money. And we also laid all of the luxury vinyl plank ourselves. Also saved us a lot of money. And other than that, I think part of it is we should have, being our first flip, we should have already had our crew ready to go. It took us 5 contractors and 5 weeks to not have a contractor just ghost us. After getting bids and all of that, they just literally would quit answering or not show up. So I think now creating the relationships we have with our general contractor as well as the subcontractors, we hired our own painter, we hired our own plumber. I have learned so much about, they say the 3 things, like you'll have somebody who's really good, who's timely, or who's communicative. You only get 2 of the 3. I've seen it firsthand with every single one of those people, and they're all different. I would say if you find somebody who knows their stuff and is accountable and does good work and communicates well, that like it's taken us a little longer, but we found the right team, and it has made this process so much better. And I think the right team is the right answer.
That's good.
Also, I will say, using a hard money lender, I wish we would have used the hard money lender for the loan and found a private money lender for the rehab. And now that we've done this, people are coming out of the woodwork ready to throw money at us that I had no idea that was possible. I heard it was possible. I didn't actually know until it started happening. I wish that I didn't have to create a scope of work, or not a scope of work, an invoice, and like fight with the hard money group to actually reimburse us during this rehab process. I think a private money lender would have made our life so much easier.
So so you did a hard money loan to acquire the property and
Yes.
do the rehab?
Correct.
Okay, so somebody came in and gave you the money to do that, and you're saying that you would probably do it different, where you would have maybe private investors or angel investors do it all, because they're kind of, well, hard money's hard. That's why they don't call it hard money, because it's soft. That's true. So,
Yeah.
which is good. I mean, obviously, yes, you got the money and paid some points up front, but you're saying if you went in and did it like an investment kind of a thing and said, okay, friends, family, hey, I need X amount of money, I'll give you 10% flat interest or whatever. Now, is it just the fact that you're just paying the invoices and have a fight? Or do you think it would be easier as far as getting more money so you'd have a little bit more of a cushion?
So every time we want to do a poll, it's $200. And so we've only done one so far, even though we're almost done with the house, just because that's more money out of our pocket. But also they want to have the inspector come out, so that takes time. They also want to like negotiate what they're willing to pay and don't take you for your word, even with the inspector coming out. And then also that you still have to pay monthly towards the loan, versus if we were to use private money, I think we would have negotiated that like we would do the rehab and all the money, including if we gave them, 2 points, we would wrap it into us paying them back. So we had more money and easier time dealing with getting the rehab done quickly and more financially effective or efficient.
Gotcha. Okay. Well, that sounds good. Now, how did you find this hard money person? Was this something did you find the house first or the hard money? Or I guess, how did that transpire?
Yeah, we had put a few offers on some small multifamily, mostly duplexes, prior, and we kept seeing decent reviews. We ended up using Lending Home, which is now Kiavi. I don't know if I'd use them again, if I'm being honest. I've heard Patch of Land is really good. Civic is really good. So I'd probably try somebody new, just because this process has been more painful than I expected.
Gotcha.
Yeah.
Well, that's good.
So how much down you had to pay?
So we ended up doing 17% down, which wasn't bad. Our origination fee was $14.99. And right now we pay $8.99 a month. Our interest is 8.95%.
Did you pay any points up front?
Yeah, well, they had the origination fee, and then there was a 1.5 points up front.
Okay, well, that's not too bad.
Yeah,
That's not too bad.
yeah. So, but yeah, like even if we were to use them for the loan, I would have either chosen them for the loan or for the rehab, or vice versa. I think that having the diversified where the money was coming from would have made life a little bit easier instead of having everything through them.
Gotcha. So now, do you mind sharing the
Christina, that's
numbers?
great information.
I'm sorry, go ahead.
What'd you say?
Oh, no, I was just going to mention a story. I was interested in using hard money lenders, and I never really, it's hard to tell from reviews, and I never really met anybody that actually had success with them, because I'm getting to a point I can't continue to keep going this way, and was interested in hard money lenders. So I was going to say thank you for sharing that information about that.
Yeah, definitely.
Yeah, I've heard really good things about Civic. I've had now a few other investor friends that I've networked with since working with Kiavi use Civic, and they're really happy with them. Patch of Land, I've heard one person have really good success with them, and they've used them multiple times. So definitely.
What's the name of it again?
The Patch of Land. It's kind of an interesting name.
Okay.
And then the second one is Civic, CIVIC.
Okay, thank you.
You're welcome.
That's good, thank you. Can you kind of give us an idea of the numbers, like how much did you buy the house for? And then how much do you think you're gonna sell? And obviously you're gonna make some money. Just kind of, if you could walk through that, that'd be great, if you want to.
Yeah, sure. So we bought the house for $120,000. We're actually gonna burr it, so we're gonna keep it. And our hope is that it will appraise for somewhere between 190 and 200. All in will be probably about 34,000 all said and done. We have a couple things on the exterior we have to fix. There's a couple of cement areas that we have to fix, crack concrete and that. So we haven't done that yet, but everything else has been priced out already in the interior of the house. So it's about 34,000 all said and done. And then we'll cash out refi the rest of it. But yeah, the hope is the low end would be 190 that we would have it appraised for 200. We gutted the bathroom, we gutted the kitchen. We are putting recessed lighting. We took out a wall between the living room and the kitchen. So like we really have done a pretty decent amount of work. But like I said, doing the luxury vinyl plank ourselves, as well as all the demo ourselves, it made a huge financial difference in our bottom line.
Gotcha. So now when you contacted the hard money guy, did they ask like, okay, the house is gonna be worth 190 and that's how much they lent you? Or did you guys go in and say, hey, I want X amount? How did that process work out?
Yeah, so they'll, depending on the hard money lender, they'll do somewhere between 70 and 80% of loan to value. And so that's how we landed at a 17% down payment instead of, less. Because if you have a great loan to value or ARV, they'll work with you and do a lower down payment as long as the house is worth it and you can prove it with comps.
Gotcha. Okay, that's great. So you guys had that kind of worked up ahead of time, knowing you're going to buy it for X, this. So when you went to the hard money guy, you already kind of had your ducks in a row. Okay, that's good.
Yeah. It's the initial part of it was went smoother than that now while we're in the thick of it. Just trying to get the inspector out, trying to get the money, because essentially it's coming out of our pocket. The other thing I would say is a lot of the people that we've connected with, and not necessarily direct connection, but have followed on social media and that, talk about like, you can do this and hard money lenders will give you the money and you don't need money. What we have found is everybody we've hired for the granite, the countertops, if we don't pay with cash or check and try to pay with a credit card, they add 3 to 5%. And so that adds up really quickly when you're giving 3 to 5% extra on everything you're doing. So we've had to put a decent amount of money of our own into it with the expectation that we'll get it back from the hard money lender, but the work has to be done before they'll actually pay us back. So just something to keep in mind for the people who haven't worked with hard money or flipped houses.
I mean, that's a pretty good tip, because obviously the first thing, hey, go get your Home Depot credit card. But yeah, you can give that to the contractor, right? But he's not going to eat that 3% that he's going to be charged. Okay, so with that, so you would have to have money, but I guess you say that if that process of getting those polls would be simpler, but again, they have to have the inspector, and it's in Garden City, right?
Yeah, Garden City.
Okay, so you got to get your C of O, right? So you got to have them come out. So that figures into the lead time, right? And then obviously when you give your invoice or whatever to your hard money, that's not a quick turnaround time, right? So maybe Tim, take note of, okay, ask them what's their timing, right? If everything's in a row, in order, I give you the invoice on Monday, when can I expect that payment? So you can kind of plan, so if you have to float it, or like you're doing, Christina, you're holding back. Well, now that adds a financial strain to your end of the business, because you're trying to hurry things through. But if it was a smoother, where it just comes out, gets a thing, and the next day it's wired into your account, and again, they shouldn't be this way, but it sounds like they're kind of squeezing into every little corner, so they keep that loan out longer, which is, that's not a good business plan. And I don't know them, I don't know the company, I'm just in my brain. But again, they still want to know, hey, it's been inspected, did Christina really do this? She's a nice person, whatever, but they still want, that stuff signed off. But what probably should ask up front, hey, what's your process for that, right? And get something like that to help you out, because it's hard money, it's points. I mean, it's well, that's good. Well, thank you for sharing that. I appreciate it. It's
absolutely.
Definitely some nuggets there, to say the least. I mean,
yeah, that was great. Thanks, Christina, for sharing that. That was great.
Yeah, no problem, Tim.
Would you do another hard money loan again, or are you, probably not with the same company, but you would do it again if another deal came along, right?
I would use a hard money lender for the loan and use private money for the rehab. That would, if and when we flip again, that's how I would structure the second one.
Okay.
Yeah.
So now
but our goal is to go multifamily.
Gotcha.
Like,
so now do you think in your network that, let's say the 40 or 50,000 in repairs, you could go get that in your network, right?
Yeah, we've already had multiple people actually reach out and have a decent amount of money that they don't know what to do with. They don't want to flip themselves. And
that's a good problem to have, Christina. I got some money, I don't know what to do with it. But that's right. You're right. They don't want to get in there and be boots on the ground, right? So that's what you got to look at it too, people. A lot of people, real estate's in the news. A lot of people, they don't want to do it. They may have a full-time, they just, hey, I met a guy like that last night, hey, he says, I've got some money. I'd like to do your apartment buildings. I go, why? Because I know you. I'm like, okay, and it's, he's heard about it through a friend or whatever, same as yours. I mean, that's what you're looking for, is those people, hey, and they're happy to get, more than the 0.087 or something like that in your savings account, now that they're all that kind of good stuff. Well, that's great. That's awesome.
Yeah, no, it's good. And it's amazing. I think, to speak to that, we're putting our flip progress on social media, so people are seeing it, friends, family, and otherwise. But also I'm sharing some of the like personal finance people that I follow that put really good content out there, and how we got one of our friends to reach out to us and say, like, we have $60,000, what do you want to do with it? Was I posted somebody else's story on Instagram that talked about, like, if your money's in your checking account, this is the interest rate you're getting. If it's in a savings, in a CD, whatever. And then at the bottom it said, in real estate, it's infinite returns depending on the deal you do. And kind of half joking, but like, I'm going to throw it out there. I said, who wants to invest with us? And it was as simple as that. Somebody else's post, and
Yeah.
beneath it said, who wants to invest with us? And literally that night, our friends reached out and were like, we have $60,000 just sitting in a bank account. You just taught us that we're losing money on it. What do you want to do with it?
That's
So,
awesome.
you know,
That's awesome.
yeah.
And I mean, the awesome thing is it's cool it's your friends, but think of what the help that you could give them, right? And that's what I look at. It's, you know, I've got a friend investing with us in the Oklahoma deal, and he had no idea, right? He had no idea, and then, you know, now we're getting distributions, and he's like, oh my God. He goes, yeah. I mean, this is, and it's something we do on a daily basis, and just kind of, oh yeah, that's what we're looking for. But to somebody who doesn't do that, you know, wow, this is cool. This works. Yeah, it works. You know, we just got our K1s, and he's like going over the moon on that. And I'm like, yeah, dude, this is only the first year. Relax, you know,
Yeah.
but that's, you know, but that's how you can give back and teach people to do that, yeah, there's another way to do, you know, the 9 to 5 or stay at a job for 100 years. And, you know, hey, you can stay there if you love it. It's great. There's another way to do it. So, and you can help them out.
Yeah.
Yeah, that's awesome.
Yeah, honestly, I think the best part about the real estate investor community so far for us, and hopefully you're all having the same opportunities, is having the mindset of abundance and the go-giver community, the go-giver attitude, that people want you to succeed. And they're willing to do things in a capacity that I've not found in my, you know, W-2 profession, maybe ever. So I'm really grateful for the community and the networking, and really having that support system and network that have completely changed my life so far in the last, and we've only been investing for a year and a half. So
That's great.
yeah, it's really good.
That is, and that, yeah, I agree. And I experienced that as well. Not to take away from your story. We have a property under contract, and we had a network, right? And that network came, we were looking for a PA, right? And this is a PA for 27 units. And they gave us 2 PAs that they used to buy the 188 units that we are involved in Oklahoma. I'm like, oh, okay, thank you. I mean, they didn't even hesitate, right? Because they're in that mindset of abundance, because here's the PAs that we used, right? I mean, that cut in half the learning curve, right? That here's what I'm looking for, and, you know, boom, and that's what you get. That's great. That's awesome.
Yeah, it's good stuff.
Thank you. Thank you for sharing. That's awesome.
What I am seeing is, am I, yeah, I'm not on mute. Okay. So at least in my friend circle, what I am seeing, my friend circle is mostly, you know, engineers, IT professionals, and doctors. So what I am seeing is even this kind of crowd, you know, my friend circle, they are immigrant, you know, they have good jobs, stable jobs, everything all set. What they were doing with their extra money was just to put in the stock, and stock is not doing great, right? Recently. So now these people, they are looking into investing in other areas. So that's how I think even my friends have initiated few meetings. Hey, guys, maybe we should look into something else.
Yeah.
So I think getting a private lender these days is relatively easier compared to, you know, when stock was doing good and other things were doing, you know, when there was a normal world. Now we're not living in a normal world. So people are thinking about different ways of making money.
Yeah, that's true. That's true. And they're really looking for a different way to safeguard what they have, right?
Yep.
It used to be you could put it in the bank and it would pay you, not huge, but a lot more than you're getting right now, right? Where they're charging you for a non-active fee. They're charging you for that. I mean, my God, but they start looking at that and go, okay, I'm going to look around for something else. And that's when the awareness comes up, right? That, oh, okay, there is something different out there other than stocks or bonds or putting your 401k, and, hoping it'll be there when you retire. But if you're there educating them and showing them, and really when I do an investor presentation, it's, here's an opportunity. It's not a sales pitch. It's here's an opportunity that we'd like you to take advantage of. We're going to make money. I want you to make money too, and if you do it that way, it's going to be a lot easier, and they'll come around and say, oh, wow, yeah, I'm not going to keep that 60,000 like Christina's people, because it's just sitting there. And you're right. Savers are losers. That's what Rich Dad and what's his name always say. But it's true, because inflation's what, 7% supposedly. You're losing that, on a monthly basis. But if you got into a hard asset, you're protecting yourself at least a little bit from that. So that's great. That's great to hear. Thank you for sharing, guys. I appreciate that. That is awesome. Any of the new people have anything to comment? You got a deals or anything? Go ahead. You were going to say something, sir. Go ahead. Nobody's got anybody that came late. We were just talking about different things we were doing and sharing. Does anybody want to share anything else?
Hey, Penn, I don't know. I just wanted to get everybody's opinions since you were talking about inflation. Where do you, how do you see that affecting real estate? I've been trying to follow it, and I hear like 18 different stories. These are so-called professionals or pros as to what they think is going to happen regarding the pricing of real estate, regarding rents and all that. Just wanted to hear what everybody else may be thinking about that.
That's a good question. Anybody got any futuristic view? Who's got the crystal ball in the room, right? And who's going to let us hear it?
So it's an interesting question that you pose. I think at least in the and this is my first time. My name's Anyetika. Sorry about that. I've got some property in terms of introduction, I guess. Got a single family in Detroit and a duplex in Redford and another in Warren. Just started in. I like duplexes a lot. I don't think I'm going to do any more single family really. I just like the numbers for duplex. Just it's very, or multis, I guess, very attractive. And but I think that the question regarding the rents, my personal view is that they're probably still going to stay high, or higher than maybe even just 2-3 years ago. There's a lot of money, I think, out there, and obviously with the Fed's going to be keeping rates up to kind of control a little bit of inflation. I think the COVID and supply chain and all that kind of impact is probably still going to keep construction costs high, which might impact supply as well. And it's interesting because a property I got in August of 2010, the Warren, I got that in 2010. It came with some tenants. Actually, one of them had a tenant, the other side was free. The day before close, I go do the pre-close inspection because there were a couple of things that wanted the seller to fix up, and find out that he had rented out the second unit to someone well below market rent. But I said, all right, I'll just take it. I'll just start getting some money right now, and eventually I'll, I didn't want to kind of force them out. So I said they'll leave on their own, and I'll kind of fix it up. And I think the rent on one side of it, I kind of increased it, thinking that towards the end of the lease, the tenant's going to see that this is crazy, and leave on their own. But the rent prices went up so high that they ended up staying. because they probably figured, I'm just going to pay to move and still pay the same amount of rents that I'm charging.
Yeah.
So, I think it's going to stay high, at least for another year, 2 or so, or again, higher than maybe what we think it should be. But I think for me also, it's kind of impacting my ability to go get more property, because when I start to do the numbers in terms of, all right, this is what they're charging for the property, I've got to sustain a certain amount of rent for the numbers to make sense. And I'm not able to see that staying for a very long time, and so it's I've lost a couple of deals that I'm like, maybe I should have just, pulled the trigger, on buy a 2-1 for more than what I bought a 3-1.5, less than 2 years ago. But I think the numbers are definitely higher, but it's kind of everywhere. I don't know, my thoughts anyway, but.
No, it's a good observation. I mean, that's, where in your underwriting, how do you stretch, right? I mean, I kind of agree with you as well. The rents are still going to stay where they're at. I mean, again, like you said too, sir, is, hey, people are looking at it like, okay, yeah, I could move and spend $5,000, $6,000 to move, right? And I'm going to pay the same rent that I'm paying. I might as well just stay here. And as long as you take care of your tenant, and not go crazy with the rent raises, but again, if they're so far below what the market is, you got to look at that as well. I mean, so yeah, I think they're going to stay. We're underwriting to higher interest rates. We're doing 4.50%. We still are planning on raising the rents, because they expect it, and we don't want to disappoint them, but we're also being conscious of, how far we can, and based on what the current rents are in the marketplace right now, probably more area specific than, comp specific, meaning you're doing comps for rent comparisons. Sometimes you go 2, 3, 4 miles. We're doing more neighborhood specific on the comps and seeing what in that area that we have a property in, the rents could go to, or what they're at right now, compared to doing a bigger, broader swath of that. And then also planning for like an exit cap rate of, a higher cap rate as well. So yeah, we are adjusting for those things. I think rents, and again, it's really the area as well, right? In the Midwest, Michigan included, unless you're buying these things, at wholesale price, you typically can't go up $100 a month like you can in Augusta, Georgia, or Atlanta, Georgia, because there's so many people moving there. In Texas the same way. I'm not saying you can't, but normally that's not what I'm finding in the Midwest, is those huge jumps that you're finding in the southeastern states, where they can do $100 every year, every month, or every year, on a property. But I think it may cool off a little bit. I don't know. Anybody else got any thoughts on that?
I would agree. I think with looking at the market overall, or inflation, I pay attention to it. I don't pay a lot of attention to what the media says about it. And I don't let it drive my decisions. I do think, as we talked about, it really depends on how we're looking at it, how we're financing the deals. Obviously I'm seeing it's harder to get money. I'm not sure who spoke about the inventory. Depending on where you buy the deals, I absolutely seen it affect that. I've seen rents. I do expect rents to stay high, especially with inflation going up. And I've seen over the last 12 to 24 months, the increase in rental rates be higher than they have ever been. And people been able to pay them as well. But whoever spoke about finding the deals and the inventories on the market was absolutely right. It has forced me to, I'm very relationship oriented too, trying to surround myself with good people, but relying on brokers to find deals or agents is almost, I don't even look in those areas anymore. You know, the opportunity has been relationship oriented and knowing people and being able to get some of those deals. We've had success too on a professional standpoint. What I'm hoping to see, I've known some people that have had some larger multifamily or apartment buildings that through COVID that have been up in age and are retiring, right? And we've seen some opportunities with that. You know, COVID has burnt some people out. And so we've been able to get a couple properties I've got. It was just because of a relationship and people were just didn't want to do it anymore. We're burned out, you know, so it's all about, I think now being creative and where you try to find the deals at, not just from a finance standpoint. For me, and I'm buying whole, so I don't flip. So it's a long-term game for me, not getting rich quick, but trying to build a portfolio. But I've had success with just that relationship there now. But definitely rents. I agree with. I think most of everybody said about rents staying high. I definitely see that being the case. Seeing some studies saying, I think almost about 60% of people in most places now are renting opposed to buying, especially depending on the markets that you're looking in. And I'm seeing some $1 million homes that's selling like quick. Obviously, that's not the market that any of us are in, but for just the, you know, affordable housing will always be a problem and being a challenge. So depending on where you're looking to invest, I definitely see still tons of opportunity out there though, even with the inflation happening.
It makes sense. Anybody else got anything else? I just put in the chat, I just put our Facebook group. We'd love to have you join our Facebook group page. Got about 152 members so far. It's free to join. Got some good conversations going on. I put it in the chat there. And to respect everybody's time, plus I have another call at 8 o'clock here. I will end here at 8 o'clock so I can respect everybody's time. I appreciate everybody's input. Love to see you back here second Tuesday of the month again in May. May 11th is our next time we get together. And obviously, please come and join us on Facebook and continue the conversation there. We hope that you got at least a nugget or two out of what we talked about tonight. We'd love to have you back next month. And in the meantime, that's my website there. If you have any questions, concerns, you can email me from there. It's pat@opportunitycreator.com. Love to talk with you, love to help you out and go from there. So I appreciate everybody coming on and spending a few minutes with me. If you celebrate this weekend, the holiday, please have a good holiday and have a good weekend, and we'll see you next month.
All right, thanks, Pat. Talk to you later.
Thank you, guys. We'll talk to you soon. Bye-bye now.